Welcome to Honor's second video on adjusting your 2014 for Indian leases. This video covers situations that require 2014 adjustments when overpayments are made.
Are there any special requirements or limitations when recouping overpayments on Indian leases?
Yes, there are. Be aware there are limitations on the amount you can recoup in a given month based upon the lease type. Recoupments on tribal Indian leases can be up to 100% of net current revenue. Recoupments on allotted Indian leases can only be up to 50% of net current revenue. For the definition of current revenue, refer to the Minerals Revenue Reporter Handbook on honor.gov. Look in Chapter 6, then scroll to Section 6.2.1.2, pages 6 through 8.
Got it. I have both tribal and allotted leases. Can you cover both scenarios?
Yes. First, we will review a tribal lease, then an allotted lease. In our example, we will use a tribal Indian lease in Oklahoma, which produced and sold sweet crude and gas plant products. The payer realized the original sweet crude oil sales volume of 200 barrels was too high. The new sales volume is 150 barrels. This situation creates an overpayment and requires establishing an Indian recoupable balance equal to the overpayment.
Let's run through how that looks on the 2014. Report your reversal and rebook lines just as you normally would when making adjustments. In this example, the overpayment is equal to $348.11.
Establish an Indian recoupable balance equal to the overpayment for each lease by using a transaction code 50 or TC50. Enter the lease number, original sales month and year, TC50, and the amount of the overpayment in both the royalty value before allowance and royalty value after allowance fields, and the appropriate payment method.
The royalty value for TC50 is a positive amount and is the difference between the reversal and the rebook lines. At this point, these three lines will total 0. The TC50 establishes a recoupable balance for a specific payer code and lease combination. This balance can be used to recoup against future revenue on that same payer code and lease combination.
Okay, that makes sense. Now that I have the recoupable balance established for my lease, how do I get my money back?
You can recoup this balance when you send in your next report. For our example, the next month's 2014 line would look like this. Notice the royalties for the new month total $561.26. We will be using this in the next step.
To get your money back, use a transaction code 51 or TC51 on the next line to recoup against the net current revenue. The royalty value for TC51, recoupment taken, is a negative amount. On this line, enter the lease number, current sales month and year, TC51, the amount you wish to recoup in both the royalty value before allowance and royalty value after allowance fields, and the appropriate payment method. In this example, the lease is tribal, and 100% of the net revenue can be recouped. Negative $348.11.
If you cannot recoup the entire recoupable balance on this report, the remaining balance can be recouped in future reports. In this example, the balance was fully recouped. Remember to pay the remaining $213.15 as you normally would.
Okay, but how does it affect the reporting if it is an allotted lease instead of a tribal lease?
Great question. Let's use the same example and apply the allotted lease recoupment limitations to see how the reporting differs. Remember, for allotted leases, you can only recoup up to 50% of the net current revenue. Establish your TC50 the same way for both tribal and allotted leases. The change in reporting occurs when reporting your TC51.
Applying the 50% limitation, your TC51 will be negative $280.63, or half of the net current revenue of $561.26. The remaining recoupable balance of $67.48 will remain available for recoupment in future reports. Congratulations on completing Honor's video on Indian recoupments. Thank you for your time.
Please see our other videos on the Honor channel. We also encourage you to subscribe to the Honor channel for updates and email us if you have any questions or comments. Thank you for your time, and we look forward to seeing you in future modules.